What's up, traders? This is Vee Trades, and today we'll be doing a technical analysis breakdown for Tesla with the ticker symbol TSLA. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So thank you guys for liking the video. It does definitely help the channel out, so make sure you get the likes up. Last time I did a Tesla video, the video got 64 likes. Let's see if we can beat that record. I know we can. So look at Tesla every Monday and every Thursday. So let's take a look at what happened since Thursday. You can see that price continued to drop down lower on Friday and today, which is Monday. And it was going towards that measure move target at the 191 level. So that's the target the bears have been trying to reach basically since September 15th of this year. And it looks like they're going to be succeeding, which we're very close to that target. So let's go and remove that circle there. Let's just clean up the chart a little bit more. So you can see that this was the first attempt from the sellers to reach the measuring target that failed because the 242 level support sent prices higher, got rejected from the trend line. This was the second attempt, and normally the second attempt is the final attempt to reach the measuring target. So they're basically right there. So this is getting more appealing for the bullish case. The reason being is that once the measuring target is met and there are reasons to go higher, that's when the aggressive buyers can come back in and drive up the price. And I'll go over the reasons why. So the first reason is that we saw a break of the yellow channel. After a break, you expect 2 attempts in that direction, and we still have not seen any attempts to resume the uptrend yet. So that is one reason why we can continue higher after the correction is over. Another reason is there's a gap right here that can be filled, very large gap, and also prices dropping down pretty sharply. And this was a breakout of the 210 levels. So again, multiple reasons why we can see a bounce or even a good sized rally after this measurement target is met. So it's not guaranteed. I mean, sometimes price can just continue to drop down lower, and then you would have to look for something else. But that would be the potential setup, for higher prices. If we see a bounce, get back above the 211 level, pull back, hold it, that would be a good sign for higher price targets. So something like that would be ideal. But either way, this measurement target is about to be met. Let me show you guys in the past what happened when a measurement target was met. You can see those one leg down right here. And let's go and clone the arrow. It's the exact same size. And look what happened. Once the measurement target was met, we saw a nice rally take place. And that was based on the previous impulse. So a nice impulse, 2 measured legs down, a nice rally from there. So basically, we're seeing the same thing occur. All this is 1 large leg up from here, 2 large leg down. That could be the start of another large leg up. It's not guaranteed to be like that, and we might not even find support right around the low 190s, but I'm just letting you guys know this is typically what occurs. So let's see if that occurs. If I see a nice bounce off the low 190s, high 180s, and it starts ripping higher, that's what is most likely setting up to do. Is setting up to fill in the gap at the 241 level, 242 level, and then make a new high for this yellow uptrend at the 300 level. But let's see if that occurs or not. If not, then you know where it's headed next. It's headed probably to the 171 and maybe even lower. So let's take a look at the weekly chart. Here's a look at the weekly chart. And again, like I said before, once we break an uptrend or even a downtrend, you expect 2 attempts in that direction. And what do you know? This was a previous downtrend in play, this orange channel that represents the downtrend. And then you expect 1 attempt down right there. And this is the second attempt right here. So the bears are trying to make a new low for the downtrend, and the bulls are trying to make a new high for the uptrend. So you see it's kind of like a battle going on. It's not really a battle, but you could think of it that way. So once this correction is over, let's see what happens once this measurement is met. If the bears fail to make a new low for the downtrend and the measurement is met, we can see a nice strong reversal in the opposite direction take place. That's what it's setting up to do. Let's see if we get that or not. If not, then if we just see continued selling, you know where it's headed next. It's headed to the 171 and possibly even lower, maybe even the low 100s. So that's how Tesla is. The market will decide if it wants to go higher or not. The higher price incentive is there because we had a nice strong uptrend in the past. But again, this downtrend has a strong influence also on the price action going on right now. So let's see what happens. We were coming to a inflection point on where the market will decide what it wants to do. Before, it was pretty easy to say we were going to go down to the 191 level. Now we're coming to a transition area. If we start seeing aggressive buying, I'm going to be expecting higher price targets and looking for higher price levels. As of right now, we can go a little bit lower and before rallying higher, or we can go a lot lower towards the low 100s. So I saw that for Tesla. Let's see what happens at this measure move target. Maybe we just get a short-term bounce. But either way, I think a bounce is going to be due sometime soon. So that's all I have for Tesla. And most likely, I'll give you guys an update this week, Thursday. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.